Huh. Well, let's see. We're going to mess with some stuff here. I'm doing this one on the go. Let's see. Go this way. Oh, that's better. Okay, so YouTube should be working. Let's see. Banners are working. Okay. Branding is working. Comments are now working. I see Joe Fernandez, Nick, Diego. ¿Qué onda, Diego? I'll see you later this afternoon, Diego. Let's see. We got Dave, JD, P. Kelly. Okay, cool. All right. So, yeah, everybody's panicking, shitting their pants. So I thought, you know what? Why don't we just jump on? I think if you're on Theta, you may be having trouble because it gave me this little pink box that said Theta's having trouble. So Theta's having trouble, but and I can't see any Theta comments. So this one you may want to catch on the YouTubes or on Twitter or whatever. I don't care. Fun show. What up, man? Fun show. I gotta have you on sometime next week. We have for those of you that don't know, on Tuesday, Jeff Snyder and Emil are coming back for making sense of crypto and coffee. That'll be fun. Let's see. Michael Murphy, Ocean Dawn. What up? What up, Dawn? Johnny Midas. Oh, from Malibu. Nice. Ooh, if you're from Malibu, man, you're doing better than all of us. Let's see. Who do we got? Oh, Dave and Ashley. Good to see you. JD. Okay. So anyway, this is just going to be a Q&A one because I know everybody's kind of shitting in their pants right now, panicking, which they shouldn't be. But this last 2 weeks has been a good time for those of you that are relatively new to the space to decide whether or not you want to be in this space. It's not for everyone. It's okay that it's not for everyone. I can tell you this, I haven't lost a minute of sleep, and I've been on a shopping spree today. What looks cheap? So many things look cheap. We're going to go through what looks cheap. We're going to talk about that, but we're going to answer questions. Just going to be Q&A, a little chill Sunday. I'm in the backyard of my friend's house because I was playing with cats. I have a cat atrium thing, but the cats learned how to jailbreak it, so they bounced on out of there. Anyway, I got them corralled inside, so I'm just walking through the lush foliage of a Los Angeles backyard. Yeah, anyway, cool. So hopefully the mic is fine. I don't have a separate microphone. And whenever I use the mobile one that you plug into the phone, it always gets this stupid wind effect. So it sounds awful. So we're going to get away from that. Tweety 5 minutes. Oh, nice. Yeah, so Candace, good to see you. Frankie, good to see you. Shalom. Let's see. Question. If I'm in DOT, should I also grab some Kusama? Well, that's a good game theoretical question. I think probably yes. You think probably you go, it's tough to quantify it, but my guess is there's going to be 3 times the projects. So when they have the parachain auction, they're going to, I think there's 96 slots left. A few of them have been determined. Akala has already been determined, and there's a few nonprofit slots that have already been determined. And this will happen in June. So what I would do is I would probably grab a third. So if you have $1,000 in Polkadot, probably have 300, 350 of Kusama, right? So 1/3 Kusama, because the projects that don't make it, don't get parachain slots on Polkadot main relay chain are going to be Kusama projects, or at least that's the way I understand it. Now it's not completely clear exactly how that works, but yes. So that's some good game theory. So anybody, let me see if that'll pop on screen. So for anybody that doesn't get that, Kusama is essentially the test net, but it's not a test net. It's just where the non-major parachain offerings will be. So Kusama is a good, if you're a DOT, believer. I bought DOT this morning, full disclosure. So if you're in on DOT, you're in on Kusama. Let's see, Land Deals, good to see you. G Mahat, good to see you. Yeah, man, I'm super excited about DOT right now. And I know everybody's like, oh no, it's the end of the world. Nope. This is just, we got to get rid of the idiots. You guys know this. I put it on Twitter, even though I'm not a big Twitter fan, but sometimes I just get on there and rage a little bit. I said, for all the People sitting at home, collecting a check, not paying rent, until every last idiot is on. This market's going to look sketch like this. This is when you buy quality assets. And for those of you that have made gobs of money, gobs in Cardano, it's okay to spread some of that out. So I sold a little bit of Cardano to buy some more DOT, to buy some more AGI, to buy some more Fetch, to buy, what else did I buy? It's been a busy day. It's been a busy shopping day. Yeah. So let's see. Grabbing more DOT. Good, Nesh. Let's see. Pissed I got 26 instead of 15. You know what? I got it at 17. I thought I was winning, and now it's 15. I'm like, it doesn't matter. You're buying quality assets on a regular basis. That's all that matters. So let's do this. Let me go. Let's see. Fun Show asks, what is your favorite utensil to slap the FUD out of people? Well, remember, FUD is not false. FUD means fear, uncertainty, and doubt. And those are very healthy, natural emotions. Don't get mad. Don't confuse FUD with fake. Those are two different things. FUD healthy. There should be a healthy amount of fear, uncertainty, and doubt in this space. It's a sketchy ass space. Illiquid assets on illiquid exchanges. And the liquid exchanges are run by sketchy individuals like CZ and these other dudes. So that's some fear, uncertainty, and doubt is healthy. It's natural. It's normal. There are reasons to be fearful. There are reasons to be uncertain, and there are projects to doubt. But there's a lot of bad math. I think it comes down to bad math and bad game theory. That's a lot of it. There's so much of that going on. We do want to be, and so what's the tool? Probably a shovel. Do you guys have a different name for a shovel in England? Shovel's a shovel, right? But yeah. So let's do this. Why don't we go, and I'm going to play, if I can do this, let's see. Hide current banner. No. Example banners. Okay, it's going to flip the screen just for a second. Whoop. I'm doing this all on my iPhone to see if this is even possible, because whenever I travel and stuff, it'd be cool if this was a fair medium for doing these little shows. Let's see. Let me go to banners. Let me go to brand, and we'll play on commercial entry just so that this is as similar as possible to a regular show, and then we will be right back. All right, let's talk about that. So Landdeal says, charts don't lie. If this goes below 30K, there's little reason 20K not next. But there's also little reason 40K not next. Charts don't tell you anything. They tell you what happened. They don't tell you what's going to happen. So they can't lie because they're just numbers and squigglies and lines and dots that are just a way for us to interpret data. They tell you nothing. I mean, nothing. You just use them. It's part of that whole necessary but not sufficient data. That group of data that is all in that big pile of things that are interesting to know. It's interesting to add color to your observations, but it's not sufficient to trade. It's not sufficient to buy. It's not sufficient to sell. Technical analysis does not work in these markets. This isn't a fully formed market. So what you would end up doing is just looking at that data and saying, yeah, that makes sense. And I believe, the whole idea of a V-shaped recovery and all that kind of stuff. This is a market full of immature people, mostly. Well, it's hard to say. Most of the Bitcoin that's being traded is not mature investors, because mature investor Bitcoin is parked on ledgers. It's cold stored. It's in places like Coinbase custody, in deep cold storage or air-gapped cold storage. That Bitcoin is not moving. The futures markets are moving. TA is accurate. After the fact, it only backtests 30%. Okay? So what does that mean? That means 1 in 3 times it's accurate looking forward. Well, guess what's more accurate looking forward? Flipping a coin. So, I mean, listen, if it works for you, that's amazing. But statistically, it doesn't work for anyone else. Again, it's good to have the data. It's not sufficient to trade with. If it's working for you, I wouldn't tell anybody. I would just keep doing what's working because you can see the future. Let's see. Dubai Money says one might say these last 2 weeks are whale and possibly. You know, here's what I think. I think, and I've been saying it for a while, not just me, a bunch of us, Jerry, and we've been having this discussion for about 2 months now, that this thing moved way too far, way too fast, and it was starting to get very crowded and uncomfortable. I mean, I would go to the gym and hear, all sorts of people talking about Safe Moon and these just nonsense, Shiva, all these stupid coins, and you just go, oh God, this thing's in capsize. And then people go, hey man, these are the coins I'm in. What do you think about them? And you look and you go, oh God, that is awful. And it's all these nonsense tokens. And you realize there's a bunch of people that came in off the couch. And I sold everything. I'm out. All fundamentals changed. Yeah, in 1 week. Somebody was saying, it's real funny. They're like, prices haven't been this low since March. Yeah. Everybody forgets. We've only really been in this area for a few months. They're like, oh, I lost all this money. You didn't lose shit unless you're leveraged, unless you're over your skis, unless you were borrowing. And I've been screaming that too. Don't take on leverage. Especially don't leverage risky assets to buy more risky assets. Why on earth would you do that? Statistically, it always fails. And I said, statistically, it always fails. And I showed you the statistics of why it fails. And it always, every other weekend, all these people with stupid leverage get blown up. Whether it's Binance, Bybit, Deribit, go down the list. How many times do you guys need to see these people get blown up to do the math and go, wait a minute, even if I'm 50% leveraged or 2x leveraged or 1.5, I could still get blown up. Yes, retail, irrational exuberance. Yes, but it's not just retail. We're in a weird situation where this is worse than retail. This is the GameStop, Hertz, YOLO buck. This is dumb money. Dumb money. And that kind of money panics in. They miss the boat. They panic in. They buy cheap assets because they go, ooh, look, it's less than a penny. I'm going to get rich. Even though that doesn't make any sense. Patsy, hello. And then they panic on the way out because everything, I've had people that have been in the market like 14 minutes and they got like $620 in the market. And listen, I'm not cash hating, but come on, let's put it in perspective. You've been in the space 13 seconds. You expect to be rich. It's been 2 weeks. So there's a guy, he was calling us. He was like, I don't know about this thing. Oh, really? You don't know? You've been in a week and he's been in less than 2 weeks. Not kidding. Less than 2 weeks. I've been telling this guy since like 2016. He's finally ready. He finally gets in with Bitcoin at like 61,000. I'm ready. Oh, you're ready now? Great. It's good that you're ready now. He gets in. He puts in less than $1,000. Of course he gets clipped. He's like, I've lost half. I'm like, you haven't lost anything if you don't sell, dumbass. He's like, oh, I don't know about this place. I'm like, oh, you don't know about it. Cool. Hey, guys, everyone, buddy over here doesn't know about the space that he's been in for 10 days. It's time to pull the plug on this thing. Yeah, you got to zoom out. If you look at anything too closely, you're going to lose perspective. So there's a lot of that. So there's a lot of bad behavior, and there's a lot of irrational game theory. And well, it's not game theory, is it? It's just irrational. And there's a lot of people that don't really know what they're looking at. And of course they're going to behave badly because they don't have any perspective. And also, and this is the biggest thing. Ooh, I'll show you the top of these trees. They're kind of cool. They don't have any idea what they own. So they don't understand what core assets are, and they don't understand what gambling assets are. They don't have any context. Yeah, cool. And that thing's tall as hell. Yeah. They don't have context. And so without context, you don't know what to sell. You don't know what you can move around. Yeah, if you get ready to see some red. And that's true. The reason that the opportunity exists in this space is because it's not a fully formed market. It's not well formed. It's not easy. If it was easy, all these half-tards on CNBC would get it right. They constantly get it wrong. They always get it wrong. And they're going to always get it wrong. Part of it's because they get their marching orders and they have certain stories they have to tell. But this was a confluence of a bunch of things. And I think the reality may be setting in that people are going to have to go back to work. People are going to have to get off the couch, go back to work. No more free rent, no more free car payments, no more couch money. And they're starting to tighten the belt a little bit. And so that's putting, there's pressure there. There's a little bit of panic pressure. Then you had the China news, which was just rehashed news from 2017. I don't know why anyone cares. So that was basically yawn. And in the UK, they're going to put tighter restrictions, and they may restrict, certain investors because they're looking out for the best interests. So they're going to make it where only people with a net worth of a certain amount are allowed to invest in crypto and all this kind of bullcrap. And I say to that, the snake bounty, the cobra bounty in India. You guys remember this story? In India, they had a problem with all of these cobras. So they offered a bounty for people that would collect cobras. And so you know where this goes. People were collecting cobras, turning them in, getting paid. Then they started farming cobras so they'd have cobras to turn in. And the government was quickly like, crap, this failed. People are gaming us. So what did they do? They said, okay, we're ending the bounty. So what did people do? Fine. They set loose the cobras. Now there are 5 times as many cobras. Ban it. Make it illegal. Make it tough. Make it difficult. Fine. Do whatever you want. Make it where it's only for rich people. Make it. People will do what they're going to do. That you can say whatever you want, but poverty-stricken families in Venezuela buy 3-year-old mining equipment, plug it in for free, subsidized electricity, and they use it to feed their families. So this thing is already out. The cat's out of the bag. There's no putting this one back in. There's no. You can take chicken and turn it into chicken nuggets, but you can't go the other direction for obvious reasons. So, yeah. Now, this is a good question. Demayan asks, could this also be a prelude to stock market dump? I contend that it's not a prelude to it, but it definitely is. It's kind of, how would you have a pre-echo, right? Like, so would this create a dump in the stock market? No, because there's not enough people with stock exposure, with equity exposure, that are also in the crypto space that are watching all this go down. But what it could be is a little sniff of things to come. So right now, these are the most irrational, panicky, sketch-ass investors on the planet in the space. We are among them. Let's be honest. So what could happen is, as these people start getting blown up, it's the long tail of investors, right? It's the $20 and $30 at a time investors that are getting blown up right now. And that's true. Dumb money ran out of money, but they might still have some money. Every one of these stupid tokens that's above a penny, that started the year off less than a penny, until it's below a penny or pretty close, there's still dumb money here. And so I would say it's very tricky right now, but there has to be some kind of effect of the free money ending, the same kind of effect that we've seen. And they're going to have their own bad news that will cause fear and uncertainty and doubt. They're going to have their own panic, right? Let's see. Tester says countries with sanctions getting around sanctions with mining. Maybe. I mean, that's a more of a Bitcoin story, but yeah, I would say, yeah. And so, based on that, and I don't know how to quantify it. I don't know how much dumb money's in. I assume it's a lot, but I'm not even really looking at that. I don't leverage. I don't borrow my crypto for crypto. The only thing I would do is I might have borrowed against some of my Bitcoin for stablecoin to collect a higher interest rate. But then it's easy. You just flip the stable coin right back, and that's it. There's no, you don't owe anybody anything. You just owe yourself. Does that make sense? And I always told you guys on Nexo, my metric was I would only borrow half of the amount of Nexo tokens I had, whatever that dollar amount, that's the most I would borrow. Why? Because in some kind of cascading liquidation, you would see the Nexo token sell off. We talked about this. What do you guys think just happened over the last 5 days? Look at the Nexo token if anybody's got it in front of them. What do you think happened to that thing? It touched $4.04 last week. It's like $1.50 right now, maybe less, $1.40. It got down to a really close to $1. That's like a 75% sell-off. Why do you think that is? People aren't selling Nexo the way they're selling Bitcoin, not for the same reason. They're selling Nexo, my guess, and this is just conjecture based on game theory, is that they're selling it because it's an asset they have that they can use to offset losses because they borrowed, because the kind of people that are buying Nexo and parking it on Nexo are doing it to raise their borrowing limits and lower their borrowing APR to borrow. Now they're selling that asset because they have a chunk of cash right there and they can meet their margin calls. Liquidations. Yes. Yes, yes, yes. And this is what happens is these liquidations keep coming. And people, they would throw some money in and they would get beat up. And then the price would go down. They throw some money in, they get beat up. The price is going down. And yeah, and I don't think it's selling because they're withdrawing. I think it's selling to cover losses that they are currently sustaining. Because everybody got it in their mind that even though, and look, Bitcoin could still easily finish the year well over 100,000. But everybody thinks that there's not going to be, these vacillations on the way up. And it's going to get really like this quite often. This market, and this is another thing that we've been talking about. Jerry and I had a whole thing where we talked about the illiquidity status of Bitcoin and that it's going into cold storage, which leaves less Bitcoin available, which makes more volatility. Then you add in 125x leverage on Bybit and Binance and this 100x and 75x, all this ridiculous leverage. And so these blow-ups look much bigger because Bitcoin's less liquid. And look at all these staking assets. Ethereum, a lot of it being staked. Okay? And what happens? Well, more volatile. And Cardano. Now, what's the great part about Cardano? It's still liquid. You can unstake in about 3 seconds and you can go and turn it into cash. Right? Polkadot. You can basically unstake as long as you're not staking at the protocol level. You can unstake really quickly and you can turn it into cash, like if you're over on Kraken or something like that. But a lot of assets are staked, which leaves the float, the actual circulating supply, much smaller than it appears. And Bitcoin especially. And Ethereum especially. And so these things they're going to swell upward as the market as this market sucks in liquidity, but they're also going to be extremely volatile and violent. And that's just kind of a normal thing. And this isn't a theory. This isn't like a speculation or a some weird assertion. This is just the number. There's less available, and therefore each individual sale or purchase creates a bigger vacillation in the market, right? It has greater effect. If there were 21 Bitcoins and 18 of them are off the market, then there's only 4 Bitcoin, but each one of those trades now has 5 times the effect. The volatility's increased because of the fact that a lot of that Bitcoin is somewhere else. Make sense? That's how this goes. And so you have to keep these things in mind. So you have to have a great bit bigger perspective. If you don't, you're going to get lost in the day-to-day stuff. And if you borrow and you get blown up, you're going to be depressed and sad and everything sucks and blah, blah, blah. And, common sense, you don't borrow against really, really volatile, illiquid assets and then take the money you borrowed to buy more illiquid, volatile assets. People were just doing the same stupid-minded things, the same flawed thinking things that bankers are doing, right? Leverage on leverage on leverage on leverage. Like these pension funds that don't have enough money, they're not making their 7.5%. So what do? Oh, let's just do this. Let's just go 5x leverage on 1.5%. We'll go to the 10-year. We'll buy 10 years. We'll go 5x leverage. Oh, what happens when that market blows up by 18%? Oh, we don't have anything left because we took on leverage. Okay, cool, gone. Why, and this all goes back to the macro of the Fed and all this kind of other stuff, but it is what it is. This is where we're at. So the same illiquidity we see in the treasury market, the same illiquidity we see in a lot of these equity markets because of this kind of back and forth shenanigan show. We're seeing similar mathematical kind of effects, kind of similar situations play out because of the illiquidity of some of these assets. And so you're just taking a volatile market, and with leverage, you're making it much more volatile. And yeah, no, and I agree. That's a good statement. Most of this drop noobs are giving in. Yes, it's dumb money handing their money off to veterans. This always happens. This always happens. People, and even some of the so-called veterans, they got nuked. Why? Leverage that you don't need in a space that gives you 2 to 3 to 700% a year. Why on earth do you need leverage? Everybody's like, I got to be rich now. No, you just have to be here and not get liquidated. If you're here and you don't get liquidated, you're fine. Yeah, I think some good things are coming. Think about this. What happens next month with Polkadot? Next month is like 5 days from now, 7 days. What happens 7 days from now? It starts the month of June. What happens in June? Oh, that's the month of the parachain offerings. That's the month that Theta does their mainnet upgrade. In July, what happens in July? July 15th, Fetch. They go from the Ethereum token to the Fetch token. They do their mainnet integration. What happens at the end of June? Cardano. Feature freeze, code freeze. Why? So they can roll out smart contracts. All of the cool new upgrades that are part of Alonzo, finishing off Goguen. Why is that a big deal? Well, it's the first time you've been able to do smart contracts on Cardano. They said there is anywhere from, 200 to 900? I don't know, that's a big range, but potentially 900 companies that are going to be leveraging Cardano smart contracts. That's not nothing. So you have huge, big infrastructure plays coming in Theta, infrastructure plays coming in Cardano, infrastructure in Polkadot. Go down the list. Look at all the things Matic is doing. So there is nothing but good news on the protocol level side. But if you own crap, what do you expect? And if you borrowed to get more crap, then really what do you expect? I mean, common sense at some point, right? So I just urge everyone to have a little bit of vision. But I also urge you that if this is too much, get out. This is not the space for you. I give you guys this quote all the time, the one about the, go to some small town where the rule of law still exists. This is a place for wolves. If you are not a wolf, you will not survive here. That's crypto. It just is. This is not a formed market. It's a slowly forming market. Well, maybe not slowly. But this isn't bull or bear market cycles. None of that stuff applies. This is an unformed market, meaning all of our data is uninformed. We can't have the data for a newly developing asset class. It's not possible. It doesn't exist. And we don't have enough data. And the world is a lot different than it was in the 1690s when the English created the bond market, when the British created the bond market. Oh, this Safe Moon guy. Even on my phone, I can bump you. I had to get rid of him. He just comes in with the Safe Moon thing. Sorry, bud. No, if you mention Safe Moon and you're not kidding, I have to time out you forever. But anyway, this is a newly forming market. And so if you're trying to draw conclusions, there's nothing to draw conclusions from. You have to buy quality assets that you can explain to yourself, that you know what you own and why you own it. If you don't know what you own, if you can't explain all of the assets in your portfolio, sell them. Sell them down to the assets you can hold. You don't need every green candlestick. If you watch, yes, there's coins go up every day. There's also coins that go down every day, right? Own quality stuff. Own stuff you can explain. Don't panic, right? This is pretty simple. It seems simple, and yet we don't do it. Let's see. Landdeal says, what happens when you use Dot Wallet and it's like not easy? Go try it. It sucks compared to MetaMask. Maybe 5% could use. Yeah, of course. Yeah, and that's why the opportunity is there. If it was easy and if it made perfect sense, everybody would be in the trade. Was that Portnoy? That would be funny, wouldn't it? No, I doubt he cares about us 40, 45, or 50 people hanging out in cat territory here in LA. Yeah. Safer moon. That whole thing's so stupid. Oh, God. Yeah, so the opportunity is here because these things aren't easy. They're complicated. They're complex. They're uncomfortable. They're cumbersome. Sometimes they're slow. They're clunky. You know, the opportunity for Cardano and Polkadot, Near, Algorand, Avalanche, all these opportunities wouldn't exist if Ethereum was great, right? If the fee paradox did not exist, these opportunities wouldn't be here. They're here because there are these frictions, even inside the crypto space. Even as we're trying to reduce frictions in the greater financial system, there are tons of frictions in the crypto space. So we have our own things we have to work out. And that's why buying these protocol layer assets makes so much sense. And so, yeah, let's see. Do I think it's time to buy more crypto? I've been buying. Myself and my clients, we have been buying for days. Today was especially big day because, well, not big day, but I parted ways with a client who was panic selling. And that is that. See you later. Bye. And you know what I mean? Like, you either let me manage your money or you don't. I'm not going to, this isn't a plutocracy. So anyway, yeah. You know, I think this is where you look at some of your core assets and you look at them compared to other assets and you find out where you could trade. So for instance, I bought, so I started the morning buying Polkadot, of course, staking it. I am actually I have 2 open orders for AGI and Fetch. I'm looking at adding some more Matic. I'm probably going to take this opportunity to grab a little bit of Ethereum because you have to burn it for all these transactions. And remember, all the fat old rich white guys that were early to crypto, they're all Ethereum pumpers. So they're gonna push Ethereum back up. Let's see, staking more Polkadot and Matic. Yep. I stake Dot. Yeah. Now I like Kraken for staking. I don't stake it directly through the portal or the wallet or anything like that. I like Kraken for a lot of that kind of stuff. KuCoin's actually really cool now too. They have soft staking, and then they also have these lending facilities. I don't do the lending stuff because people are sketch, but I do the soft staking. If I'm going to have assets over there on the exchange, I'm going to have even if it's a day or two at a time, I do it just to kind of keep putting Matic orders in 9 cents. Well, that'd be sweet. So yeah, there's a lot of opportunity right now if you're not panicking. If you're just looking at the assets that you like, there is a lot of opportunity. Bernard, what up, man? Yep. So okay, we'll do a couple more little questions, and then yeah, Kraken's nice. Kraken's nice. It's also incredibly secure. I just don't like their order entry. I think it's a little weird. It's a little clunky. It's kind of counterintuitive. Unless you go to advanced, when you click on advanced, then it makes perfect sense. Then it's a normal order entry. But the first order entry boxes that pop up are a little bit clunky. I'm not a super fan of that, but whatever. Okay. So yeah, we won't have a show tomorrow because I'm doing Money Map Press, but I will in the Telegram. I will post the link to that a few hours afterwards, so you guys will still get a show. It'll just be, their show, whatever, same difference. And then Tuesday we're back on. Tuesday, Wednesday, Thursday we're back on, and then I think Friday I do Money Map. And again, I'll provide you guys a link, so that'll be kind of cool. Let's see. Oh, airplane. Where's that? Let's see. Blue sky. It's a nice day. I'm giving you guys all the greenery. You guys are getting a jungle adventure. Yeah, so let's see. Do you think we should buy more VeChain? No. I'm not sure. VeChain is not a core asset. VeChain is an asset that went way up. So I would not be leaning into VeChain right now. I would actually be skinning it for a little bit of profit. Most of you should be well in the profit. And I would be using some of that to go back into core quality assets. Let's see. It says all accounts are disabled to buy. What says that? What say you? What platform are you reading that from? Let's see. Oh, Scott Hill, what's up, man? Yeah. So quality. Look at your balance sheet. Don't worry about what prices were yesterday. None of that stuff matters. Look at your portfolio right now. Make sure you're front loaded into quality assets. Let me see. Alan, what's going on, man? Let's see. How many days of down do we have before we go back up? We got to wash everyone out. Oh, Coinbase, Crypto.com, Binance. First of all, Binance US is very illiquid. Crypto.com is incredibly sketchy. Coinbase is the only decent one. I hadn't heard that there were any problems at Coinbase, but you might just have a lot of people pouring into it right now. The Nexo token, yeah, the Nexo token is super cheap, and I actually bought some of that yesterday because it kept saying, "Hey, deposit more." I'm like, "Oh, here we go." But yeah, I bought some more Nexo yesterday. Not at these delicious lows, but at the then low. Let's see, what do we got? XRP dropped below $1. Ethereum 24, is that right? No, XRP 70 cents. EOS $4. Ethereum 1972. Cardano $1.16. Cardano's still doing pretty well. Bitcoin 33,000. VeChain 7.5 cents. You know what else I dumped? I dumped a little bit of Filecoin. Even after today, I was at a 13x on it. And I said, well, this is the perfect time to skim some of that. So I sold I sold a third of my Filecoin. And that's actually, what did I buy? Oh, yeah. That's what I used to purchase more Polkadot. So I transferred some. So there's, this is when you move the balance sheet around. This is when you kind of look at your winners and you say, okay, where am I light? Where would I rebalance? And, I had some big winners in there that were still big winners. I mean, my aggregate price on VeChain was less than a penny. So I sold some for just under 8 cents, 7.9 cents. I sold a pretty good little chunk. I'd say probably half of my stash. And which, again, 700% profit. You're not going to laugh at that. And that's what actually, let's see, what did I do with that? I think with that, what did I buy with that? Oh, I bought a quarter Bitcoin. Let me think. I got a quarter Bitcoin. I got some Nexo. I guess I've done a lot of trading today. I got quarter Bitcoin, Nexo. Oh, and some yeah. And some USDC that I left on Coinbase to see if there was a price variance between. So I've noticed that the price of Cardano, it will pop on Coinbase, and sometimes there'll be a 6 to 10 cent difference between Coinbase, Cardano, USDC, and KuCoin, and sometimes some of these other exchanges. So if I see a big variance like that, I'll sell Coinbase and buy the other one in terms of Cardano, just to grab some extra tokens. And then those extra tokens are kind of what I'll use when you have things like this where the market gets crazy. That's my cash pile. And everybody's like, oh man, Cardano was $2.40 last week. It doesn't matter what it was. If you really want to look at what it was, you go look a year ago, and what it was 3 cents. That's what it was. So none of this, yeah. People's memory is so fickle. You said it. I remember 6K. I remember. Now, I didn't buy at 6K. I actually was buying. I was at 8,000. I kept waiting for Bitcoin to drop. I'm like, okay, we're going to get 6,800, 7,000. I had all these orders in at 6,000 to 7,000. Of course, none of them ever went. And I kind of got left behind. I started buying again around 12,000. So, was it 12? Maybe just under 12. But anyway, yeah, I started buying again around 12. And then, of course, everything from November on was crazy. But remember, we didn't even have last year wasn't even a good year. Last year was complete chaos and panic. In March of last year, Bitcoin touched 3,700. Sure, for a few seconds, but it did touch it. And so I just don't know if people are paying attention to the greater story. They're looking. They're staring. They have a microscope and they're staring at dojis. Oh, this doji, it posted a doji. I hear. Look, if you're looking for a doji, you miss the whole point of the digital asset space. You're missing it. You don't understand game theory. This market is not trading off of a doji. No one gives a fuck. If you're investing in the crypto space, I think if you want to be smart and you want to win, you invest in assets you're willing to hold for 2 to 3 years because you believe they will meaningfully change the future. If you are not willing to do that, you're going to get punished. A few people will get lucky, but mostly everybody will get punished. So, yeah. Let's see. Balance 6K about 6 times. Let's see. Oh, Nick, FET and AGI for me. Yes, I have orders for both. I agree with you on both. I think Fetch is still like right around 15 cents, and AGI is, AGI is 15 cents. Fetch was like 19 cents, right? Anyway, they both look great. I'm actually really excited. I think there's a huge play on AGI when they port over to Cardano. That thing's going to skyrocket. My guess, again, not advice. You do you. That's just for me. My advice to myself. Adam, a buy. I mean, everything's a buy right now. I'm losing a little bit of faith in Cosmos as far as getting it done. Cool tech, but there's a point where I don't know how many of these protocol layer assets are going to really be able to compete once you have some kind of scaling in Ethereum, but then you have Polkadot and Cardano running full steam ahead. I mean, how much space is in there for somebody else? I think Near catches a bid. Matic helps Ethereum compete. But, beyond that, do we think there's space for 20 protocols? I mean, how many different phones? There's iOS, there's Android. There's not really any good. There's not 3rd, 4th, 5th, 6th, 7th, 8th, 9th, right? Like there's just a few systems in play. And I think that the world will probably look something like that. 3, maybe 4 of these protocol layers, interoperability among the top ones, and Rune potentially blockchain, interoperability blockchain to blockchain. That makes sense. They're part of their bridge system, Near. But beyond that, I don't know. So that circuitous answer is to say that I don't know that I believe in Cosmos enough to have any kind of major stake. That would probably be a very small position if you were going to do it. But it wouldn't be something I'd be looking at today. That's just me. Okay, let's see. What was the reason for the creation of alts versus Bitcoin? Well, Bitcoin originally was meant to be a peer-to-peer payment network, and that's not really what it's being used for. It's more of a store of value, kind of a gold 2.0, and that's fine. That's a very good use case. But it didn't until recently even have the potential to have any kind of smart contract functionality. Now there's 95% signaling among the miners that Taproot's going to go into effect. That is an upgrade. It's only 2 lines of code, but it's an upgrade that would allow some level of simple smart contract integration into Bitcoin in the future. So they would signal that here in the next few days, and then it's at like 95%. It's got to be 90 or better to pass. And if Taproot passes, then sometime in November they would do that upgrade, and which would be cool. But it's not likely, nor is it necessary, nor is it really even realistic that Bitcoin would be this big smart contract platform, because proof of work has shown us that there are just some kind of some issues with time and relative speed compared to these proof of stake assets. And they're just different things. Bitcoin is incredibly secure. It's slow, but it's slow by design. And it's solid and it's sturdy. And it does use a lot of energy. The problem is not the energy that it uses, because that will force the green initiative. That will force people to look for cheaper, more efficient, more elegant ways to grab energy. None of the environmental arguments are legitimate. They're all garbage. But what is legitimate is it does take a lot of energy, and it's prohibitive on competition as far as the design of the chips. So you have basically just a few companies manufacturing these chips, and that's a technology battle that's not decentralized. That's like two companies, right? And then those two companies basically have a stranglehold on the mining technology, and then you have about 10 um, mining concerns, or mining farms, whatever you want to call them, whether those are where you contribute compute power and they just plug you into the kind of to the hashing pool, the mining pool, or whether these are private facilities that have a bunch of rigs and they're just mining on their own. But this tends to coalesce with people with deeper pocketbooks. It just kind of does. So there are some centralization, some realistic centralization problems with mining, but security is not so much the issue. You have, you just it's a very complex issue, but it does different things for different people. So it's not necessary that Bitcoin be super fast and super elegant for what it's trying to do. It's doing that just fine. There'll be layer 2 solutions that batch transactions and do things like this, which will allow Bitcoin to be used more as a peer-to-peer. But people they weren't buying things with gold either. And so my guess is Bitcoin looks a lot like gold on corporate balance sheets as a hedge against market uncertainty. This will scare a few people away, but not really, because this will all be forgotten, and people will giggle about this in 6 months. They'll be like, ha ha ha, no big deal, even though they were all panicking and crapping their pants. So yeah, so it's more a proof of stake versus proof of work kind of an argument. And as far as being a currency of the internet, it's unlikely that Bitcoin is the final currency of the internet. It's more likely that stable coins, a variety of stable coins, are the currencies, of the internet. But you will have savings account assets, store of value assets like Bitcoin, and then you have all these infrastructure plays, these smart contract platforms that allow you to do a variety of other really fast, really frictionless, really elegant streamlining of the current legacy financial system. That was a long-winded explanation for proof of work is slow. Let's see. Do you feel like all these FUD articles and stories coming out are part of a larger scale plan to shake out retail? No, I think bad news sells. If you go to a restaurant, you have a good meal, you tell a few people. If you have a bad meal, you tell everyone. Bad news sells. Everybody loves the bad news, and everybody loves to tear. Another thing, everybody loves to pick fights with us because they've been watching all of these people get, balance sheet rich off crypto, and they believe that we're undeserving, and they believe, they're mad they missed it, sour grapes, whatever you want to call it. They love it that there's this sell-off. They love it that we're getting beat up, and they're going to thumb their nose in our face. They're going to, or whatever the phraseology is, they're not going to let us forget it, because this may be their 2 minutes, each year, where they can go, crypto sucks, you guys are stupid, because the rest of the year it's going, straight up to the right, and it's ballooning, and it's hoovering in liquidity, and there's nothing they can say. So all they say is it's bound to go down. They just keep saying it. It's bound to go down at any moment. It's bound to go down. And once a year they're right, or twice a year they're right. Good, give it to them. Good on them. I don't think it's a coordinated effort to shake out retail, because I don't think the average retail investor. This is FOMO investors and some early investors. The retail investor isn't here yet. People still aren't buying digital assets through their brokers, definitely not through their banks. So we haven't kind of crossed the Rubicon yet, but we're getting close. Let's see. Pawn says they're layer 0 backed by Binance, and Moon Rock looks ugh. Well, if it's got the name Moon in it, and if there's fish or moons in it, stay away. People just jumped on. We'll rewind. Oh yeah, expat. Thanks for hanging out. Thanks for hanging out with us, man. Let's see. It's still cool. Exactly. Hating on crypto is cool. It's still in vogue. Greetings. Oh, from Gettysburg. What up? Yeah, cool. I guess you guys are having decent weather, right? Let's see. You don't believe this is a coordinated sellout, so why such a dump? Well, because you have people with leverage. There's the first liquidations, and then there's cascading liquidations, and then there's people that come and try to buy the dip. Maybe they try to buy with leverage. There's been so much bad behavior, and there's so much dumb money in the space. Now, a lot of that is gone, and I think we're going to see these markets start to shore up a little bit, and a lot of these assets start to kind of build steam. What you're going to notice now over the next week, look at the assets. Pay attention to the assets that start to rebuild. My guess is it's 90% protocol, right? Look at these assets. Look what starts to rebuild over the next week. I don't know. None of us know, but I'm just guessing that it's going to be mostly protocol layer assets. And that's probably the greater story. That's what will tell you where people's heads are at. Because idiots are not buying Cardano. Idiots are not buying Polkadot. Idiots are not buying Near. Okay? They're not. They're buying Safe, Moon, Space Harbor, Marlin, Fish Dick, whatever. And they're getting rug pulled. Do you guys see the one where the dudes, and they're saying they got hacked, of course, but they just said, we just stole all your money and there's nothing you can do about it. Wah, wah, wah. I think it's called DeFi. What, DeFi something? I don't know. This is the dumbest thing. This is another one of these Binance Smart Chain scams. At some point, one of these governments is going to snatch up CZ, and this guy's going to have a lot of explaining to do. And my guess is he doesn't have the tools for that. And Binance may, I don't know what's going to happen with Binance, but my guess is a year from now, Binance doesn't look the way it looks now. I'm not very confident in Binance's ability to exist in the same way they exist now in the future. My guess is they're going to have to unwind all that leverage, or at least stop offering these ridiculous products. My guess is he's going to get called on the carpet about all these projects that keep stealing money and disappearing, and that he promotes. And then, CZ goes and erases tweets and does all this very, very unscrupulous bullshit. He's a sketchy dude, man. He sits there and, oh, not me. I'm just for the community. No, you're not for the community, dude. You know who's for the community? Roger Ver, right? Adam Back, hashtag Satoshi. They're for the community. Andreas Antonopoulos, for the community. Okay? You know who's not? CZ. He gives zero shits about the community. He doesn't care about building the crypto space. He doesn't give a fuck. He wants to skin everybody alive. And he's laughing at everybody. Because something on Binance chain gets blown up or rug pulled every other day. And people still use that bullshit. Good luck. Good luck on you. So it's not, I don't think it's a coordinated dump. I think it was panic. I think it was leverage. First, you have the people that were leveraged in the futures market. They get blown up. They start trying to cover losses. Then you have people that had the, 50% leverage, 70% leverage. You have SALT lending. You had people with 70% leverage. You had hedge funds that were borrowing from BlockFi. Hedge funds, in quotes. These little fly-by-night organizations that call themselves hedge funds that don't know shit. They're a bunch of gamblers, degenerates. They get blown up. Then people that had borrowed on platforms like Nexo, they start having to answer margin calls. You got to sell from somewhere. So you start selling, some of your winners down to pay for your losers. And you start saying, what do I have to do? And when do I sell? When do I not? And it's liquidations beget liquidations. And then you get to a point where there's a lot of people that think we found the bottom, and they go in, and hopefully they don't go in with leverage, but many of them did, and they get blown up. And until this settles itself out, until people get to the bottom. Now, there are a lot of people, that are gone from crypto. Do not exist. Portfolios evacuated. Nothing left. See you later. Bye. Period. It is what it is. So just don't borrow. If you don't borrow and you buy quality assets, you don't stress about anything. Let's see. Oh, I get that a lot too. Oh, thank you. Yeah, Heath is awesome. Let's see. Hacking, pipeline hacking. Any comment with BTC ransom? I think they paid 75 Bitcoin ransom. Wouldn't it be interesting if someone in the oil business engineered that? Do you really think it's beyond them to engineer something like that to pump the price of oil? Right? These prices go up like a rocket ship and come down like a parachute. You know, the oil, it's so sketchy. And if I was an oil exec, I'd probably say, a good software hijacking might not be such a bad idea for the market. So just throwing that out there. Let's see. Did you see that Charles video to Jack? He's now done one for, let's see, Cubes, Elon, and now Jack in the last couple of weeks. He knows what's coming. Yeah, Charles is so much ahead of the game. And, Dorsey's cool, but, Dorsey's not a game theory guy. Dorsey's not really an engineer, not to this level, not like these guys. Mark Cuban is just a rich, lucky guy who's done nothing with his money for 20 years, and he wants to be. He's always wanted to be Elon Musk, only he's not smart. It is what it is. We are who we are. But you know who is smart? Charles Hoskinson, and he gets it, and it's almost like he's coddling these guys like children. Like, hey, kids, you sound stupid right now. Let me explain to you why you sound stupid in a way that doesn't directly call you stupid, but you're stupid. So I like when he does these little videos that basically call these guys out for having very little understanding of the digital asset space and the complexities of building these platforms and the utility of proof of stake and stuff like that. Let's see. Would now be a good time to buy the dip? Well, I think you should be always buying these dips to rebolster positions that you have that you think you're light in. I just keep thinking that I try to imagine where's the world 3 years from now? What does that look like? And where are these assets going to be? And that's why, when I see 15-cent AGI and 18-cent fetch, I'm a big AI supporter. And so for me, that's a buying opportunity. $30,000 Bitcoin, to me, Bitcoin's $1 million a coin. So if you're going to give me Bitcoin for less than $1 million a coin, I'm going to continue to buy it as long as I don't have to take leverage and as long as there aren't other better ways to mine some of this volatility, under certain circumstances. And so I use these protocol layers because I believe they have sustainability and staying power, and I believe they will have more velocity, the token appreciation, based on utility than Bitcoin. But Bitcoin is where wealth will be. Wealth will hide in Bitcoin. But wealth doesn't mean you have to be rich. If you have $48 and you want to preserve your purchasing power, if you're dollar cost averaging into Bitcoin, I believe you're going to be okay. I believe that. If you've been buying since last year, okay, if you dollar cost average, do the math. From last year to now, you go from 7,000 up to 65, 64, and back down to 30. Okay. But the majority of that was only 2 months where it got really high. The majority of that was buying it much, much, much lower than it is right now. Because from here to a year ago, you really only got the excitement going in late September, October. And really all of this was kicked off by PayPal, right? In June, was it 19th of last year, when they announced they were going to be doing, you're going to be able to hold Bitcoin, Litecoin, Bitcoin Cash, and Ethereum. And so that announcement was what I thought jump-started the markets. Anyway, cool. Let's see, Gordon, what's going on? Sorry, just came in. Do you think it's going lower? I think some assets are going lower, Gordon. But I don't care because I'm just buying the stuff that I think I'm too light on. I'm using this as an opportunity to rebalance my portfolio. And the cool thing is, anything you buy right now, as long as you're not using leverage, you're going to be happy about it at some point in the not too distant future. So, always is at least a good time. Yes, always dollar cost average. Always, always, always. If you want to buy something, break it into 3 to 5 purchases. And you'll feel better about it. And you'll also feel like whether the market goes up or the market goes down, you're getting a great deal. Okay, let's call it a day. You guys have a wonderful Sunday. Stay out of trouble. Don't do anything my poor insolvent drunk, strung out on meth, smoking water, hashed out heroin junkie grandmother is doing. And she is, what was she on this morning? She had a cigar. Oh, she had a cigar with angel dust, like on the end of it. I don't know what you call that, but that's what she was doing. I'm like, Grandma, you're on fire. She's like, get out of my damn way. I'm like, okay, hey, that's how Grandma be.